Welcome everyone. Billion Careers HR's next series welcomes all of you all to today's webinar. Our topic for today is financial wellness, your ultimate employee engagement tool. This is our eighth webinar in this series. So first of all, let me introduce myself. I'm Steffi Grace, your host for today, and I work as the Assistant Marketing Manager at Billion Careers. I come with over 5 years of experience, both as a marketer and a digital media professional. I've had the opportunity to work with some memorable award-winning campaigns for B2C brands. Apart from being a dog lover, a pie maker, and a water sport enthusiast, I share a profound love for creative outlook. So that's about me, and I'd like to introduce our lovely speaker for today, Anisha Dosa, who's joined us today. She is the co-founder and Chief Executive Officer at Jiffy. She is a renowned Mumbai-based entrepreneur who is also a mother, a sports enthusiast, and an adventure seeker who comes with a noteworthy background in investment banking. Over the years, she has led business diligence and crossed $100 million plus investments across B2B, B2C, tech, and healthcare sectors, to name a few. She's also worked closely with underprivileged communities and advised and directed funds from international funds to scale social enterprises. As of today, she is famous for Jiffy being the employed workforce's personal finance app of choice. So we'll keep this webinar as interactive and informative as possible for y'all. At the end of the webinar, we will have a Q&A session wherein y'all can feel free to put in your questions at the chat. So without any further ado, let's start to hear from our amazing key speaker, Anisha. Are you ready, Anisha?
Yes, why not?
Yes, amazing. So Anisha, to start off with the first question, I'd like to ask you, we see financial wellness becoming increasingly top of mind for employees and employers alike. How does it impact a company, and how important is it for for employee engagement in a company?
Yeah, so I think the entire the interaction between the employer and employee has definitely evolved a lot. I think it was definitely expedited in terms of the importance of employee engagement given COVID, given remote working conditions, and so on. And I think the advent of a lot of funding coming into the sector or into India itself, which has created a what you would typically call an employees market, has further fueled the urgency of engagement. Right now, traditionally, most companies were engaging with employees on the health and fitness side and kind of taken off at some point. Mental health became a very big pillar, especially during COVID, and continues to be. And then, of course, you had basic other health related engagement activities, whether it was insurance and so on and so forth. I think over time, two things that have become very, very paramount to any organization. One has definitely been how you ingrain culture in the company and how you what kind of activities sort of form a subset of that particular culture, right? So how are you engaging your employees from a more human level, more non-work perspective, which has definitely taken quite a degree of precedence. So yes, that's definitely one aspect of it. The second aspect is finding the root cause and solving it, right? So on one end, there's, mental health, which is definitely important to tackle. And there's, but the root cause of a lot of, almost 40-50% of mental health issues stems from financial stress, right? So the employer then goes to look slightly deeper and says, okay, how can we engage our employees beyond the, typical insurance kind of products, and go deeper in this employee's journey to actually benefit the end user. And I think it's stemming from there, which kind of leads us to financial wellness as a whole pillar that's driving a huge degree of stress in the ecosystem, and one that the employer is actually powerful enough to crack for the workforce in the company. So I think as an engagement tool, it stems from that and the ability to create a better employee experience, a loyal employee experience, and as a result, improve stickiness with companies.
That's a very well put answer. I think when we take a step back, I guess it makes complete sense. Where does it stem from, the stress trigger, the mental health aspect of things? So thanks for that, Anisha. How can poor financial well-being affect a workplace?
So there's multiple ways, right? I mean, poor
Right.
financial well-being typically will affect all of us, with inside or outside the workplace, right?
Right.
But given that we spend majority of our time doing our jobs, it directly will impact productivity, right? So when there's financial stress, there's obviously lower concentration. People may not necessarily be as productive. Their minds are sort of occupied in trying to resolve those issues. What we've also seen is a lot of people kind of seek outside help to resolve their financial crisis, and sometimes they fall trap or fall prey to what we call adversary lending terms, or predatory lending terms, which then fuels them into a further debt cycle, and that kind of continues, right? And then that typically will cause aspects like absconding and issues related to that. Now, having said that, definitely would like to caveat here, right? Financial wellness is not the sole reason that drives it. It's probably one of the biggest reasons that causes low productivity, greater stress in the system, unprofessional practices, which eventually lead to kind of absconding and so on. But it's not the only cause. So wellness as a whole and employee engagement as a whole, and to the credit of most HRs in the country, they're looking at it much more holistically than just financial wellness as one pillar.
Right. I think, I think we need a holistic approach to the problem of financial wellness, not just monetary terms. That makes sense. So, thank you for that. Coming to our next question, why should one add employee financial wellness to their company's benefits?
Why should they add employee wellness or employee financial wellness?
Yes, employee financial wellness to their company.
So here's the thing, right? So for most of India and for the majority of the country, their relationship with finance starts with their employer, right? Whether it's typically the first insurance policy that you've taken from your health insurance perspective, PPF deductions, salary accounts, that entire, middle India, which is really, apart from the 50 million odd, overbanked segment, the rest of India starts their journey on financial services with their employer. It's their first port of trust, right? So the importance, but the challenge is that in the last decade, the employer has actually stopped the buck at salary accounts, insurance, and your sort of basic deductions from a tax perspective. No one has actually gone further or stepped deeper to say, how do I solve the problem of getting every borrower in the country to be a saver and ensure that not a single employee in my company has to go for a handout or has to take on predatory lending that pulls them into debt traps, right? Because that would require going much, much deeper in the financial wellness journey. Kind of like what insurance was a first step a decade or so ago. Today, financial wellness is a first step, right? Where it stands today. So I think because the employer is at the fulcrum of trust and their first step in the journey of financial services, they become the backbone or the most credible source of truth when it comes to additional products here. Right? So they have the power to change a lot of people's financial status and well-being and allow that base that would typically not have access to the knowledge, to the way in which you actually make your money work for you, give them access to that and allow them to grow in terms of wealth, rainy day savings, and so on. So I think very, very important pillar in the journey of the user. The second aspect is the employer also has the power to be able to give employees access to financial services at the best cost possible, right? Which they would not typically get, especially the new to credit, those who had an adverse credit event because of a couple of months or a few years of a bad financial situation. So they have the power to be able to extend services at the most minimal cost, right? So to that end, there is a moral obligation, right, that every employer should give their employee, to the extent that they can, that basic degree of financial access at the best possible. So these are the two main reasons I believe that's absolutely critical for employers to look at financial wellness.
Yeah. Yeah, I think it makes sense. Also, when it comes from a employer side, there's much more credibility and trust factor involved, like you mentioned. So, yeah, that makes total sense. I want to talk about earned wage access. This is a term that we've heard of late. We see companies in India have slowly started to give this as a benefit to their employees.
Sure.
What is earned wage access? Could you help us understand?
Sure. So on-wage access is it enables employees to access their salary that has accrued to them for the number of days worked, so that they don't have to wait till the end of the month to get paid. Right. The way it works is us as Jiffy, we will go partner with a corporate, we'll integrate with their HRMS systems. Once that's in place, any employee of a company can download the app and access his or her salary on demand. Right. We do not discriminate from one employee to the next. We do not charge any interest, and the employee has a completely hassle-free experience because there is no paperwork involved, right? So it's a very equitable offering because it's a flat transaction fee that the user typically will incur for this service. And the extent of the advance is repaid by the corporate at the end of the month, right? Making repayments completely hassle-free and matching their income cycle, right? So that's the crux of the product. It allows users, regardless of their credit foundation, to access liquidity in times of need, right? When we started, right, or rather when this concept started in India, most people assume that there would be anywhere between sort of 2 to 3% uptake, right? But what you see is north of 40, 50% by and large. And the real reason for that is because people have short-term liquidity requirements for which they either have to go beg, borrow, steal from like family members, friends, community lenders at 5, 6%, or from other institutions where they would get charged normally a very high rate for low ticket and low tenure requirements.
Right.
This is an avenue for you to plug your liquidity gap, save yourself money, and then enable you or propel you into the next phase towards savings.
Yeah. That's very well put. I think it helps us understand it as a financial instrument. And also, liquidity has been a major challenge for employees. I think by the end of the month, I think that's when the pain point is for most of the workforce. So I think that's a very well curated product for our Indian market. And thank you for that answer, Anisha. Now, again, as a financial benefit, earned wage access has emerged as a powerful retention tool and as well as an engagement tool. What are some of the benefits for an employer and an employee? I know you did cover a bit of it in the employee space, but from an employer's perspective, if you could tell us how is it beneficial?
Sure. Okay, so I think a couple of things. One is, earned wage access along with a lot of the other pillars is what drives retention, right? I don't think there's any one specific item on the wellness pillar that can causally be related to, curtailing retention. Where, of course, I think it does help is engagement is very high as a product because it's linked to your daily, if not weekly pay cycle, right? So engagement inherently is very high for this product. Where the employer benefits is threefold, right? One is definitely the fact that, like I said, attrition has become a challenge. Employees are demanding better experiences, better products. What can my employer give me that's beyond just my salary? And there is that search for those kind of benefits. So earned wage access, at least we anticipate that earned wage access will become synonymous to any employer in the near future, much like insurance became the last few decades, right? So we definitely see EW becoming that critical to the the employer-employee relationship. The second aspect is definitely with regard to companies that already extend advances, right? So a lot of corporates will get advanced requests, will either honor them or will have a policy not to. In both cases, the corporate is affected. One, they're affected in terms of their working capital that gets stuck. Two, they're impacted from the point of view that, it's not really nice saying no or turning down your employees in times of need, right? So to that end, that's why this product really resonates with a lot of the CHROs and the HR teams, etc., who feel like, it doesn't cost us anything. We have no risk to offer this. Why not give the employee the choice to choose whether this is a benefit they would like to indulge in or not, right? So that's definitely one aspect of it. And I think the third piece is, right, the entire wellness piece associated with this, right? It's not just earned wage access or short-term liquidity, right? But the product is holistic financial wellness. So we do like financial education, literacy sessions, we have savings tools. We also have a way for the users to access their salary on demand, completely free of cost. So it's really the entire package that is creating the impact that employers would have to otherwise seek out themselves.
Right. I think the interesting part is, even from an employee sense, you don't feel like when it comes to a loan, you have this sort of a guilt sense that you haven't earned it to acquire it. But I think with earned wage access, you feel entitled to getting what you worked for.
Yeah.
So I guess that works great for the workforce.
Yeah.
So now, during the pandemic, we know that a lot of people faced with a situation where their expenses went ahead of their salary. Can you help us understand of how earned wage access as a financial tool changed the ecosystem of financial well-being during COVID? If you could highlight the pre-COVID and after COVID scenario of how EVA helped as a
So
product.
I don't necessarily believe that. So while COVID propelled the need for the product from the HR perspective, the need for the product existed well beyond COVID, right? And well before COVID. I think it's more the gatekeepers that recognized that this was a product that was needed during that period, because that they saw an influx of requests that they weren't able to honor, right? So to that end, I feel like this is a product that once we've entered a corporate, we have no sort of challenge in seeing the uptake or seeing the pull for the product, right? We don't really spend money on marketing to acquire the end users. So to that end, I would say that COVID didn't propel that. It's more, it changed the way corporates looked at us and where we fit into a lot of their priorities.
Right. Makes sense.
And there's a question on the group.
Yeah.
Yeah.
So, yeah, we have a question from Ayushi. Is the product Jiffy viable in a startup ecosystem?
Yeah, absolutely.
So, Ayushi, yeah, that's a simple answer for you.
Yeah.
It is.
We have a lot of startups using our products. So, yes, definitely.
So, coming to our other question, next question is, if you could help us understand how EVA or earned wage access has played a significant role in the Indian economy, especially in the current times, probably from the point of inception to how it is faring now, and how is it propelling our ecosystem?
So when you say propelling our ecosystem, is it more in terms of how it's helping the larger economy?
Yes, the larger economy.
So I'd say one is definitely the leakage that used to happen in the credit system. So, if people were looking externally for access to short-term liquidity, they were typically paying north of 3-4%. And then, having to keep servicing that particular advance. I think having an option that allows you to take access at a nominal flat transaction fee or completely free of cost is something that's definitely reduced the leakage on the credit front, which means more people have at least 3 to 4% of their average income every month to save, right? Which is a substantial amount. So that's definitely one aspect. I think the other aspect is employers looking at financial wellness much more seriously, right? Whether it is the EWA piece, whether it's the financial wellness piece, but really looking at it much more seriously and trying to see how can they play a pivotal role in actually changing the shape of how the country saves, right? Because, like I said, there's your middle India, which is, forms the belly of the workforce in the country. And most people either have money sitting in their current accounts or in, community chit funds, or, just not earning anything on it. And so
Right.
how do you get people to do more with what they have? And how do you get people to have more by ensuring that the leakage is plugged? And I think that in the next 5 to 8 years will definitely help, people save more either for emergency requirements, save more towards asset purchases, save more towards, various consumer purchases, which obviously impacts the economy as a whole.
Thanks for that, Anisha. Um, uh, we essentially would see EVA or earned wage acts as a product for mainly tackling unforeseen expenses. But I think it's an interesting take on how you mentioned 4% can go into saving. I think that is definitely a very interesting insight, and also, in a sense, nudges a person towards saving at large. So that's a very interesting take on the nature of the product. We're coming to our last question now. Since you are part of the EVA benefit providing market,
Yeah.
what has, yeah, sorry, was there a disturbance here? Okay, I'm going to continue. Since you are part of the earned wage access benefit providing market, what has been the user behavior towards this as an instrument of financial aid?
So, sorry, could you repeat the last sentence? I couldn't quite
So,
get that.
sure. So, since you have been part of the earned wage access benefit providing market, what has been the customer behavior or the user behavior towards EVA as an instrument of financial aid?
So the user behavior has definitely been obviously very encouraging, right? Like I said earlier, we started off with a expectation that you'll see like 2 to 3% uptake. What you're seeing is north of 50%, which means there's a huge untapped market.
Right.
One of the benefits that we've seen, which is about almost 30% of our use cases, is employees really value the matching of income and liability cycle. And a lot of the use cases are driven by fueling on-time liability payment, right? So whether it's your credit card bill or your EMI bill or your utility bills, etc. So I'm talking about liabilities and expenses together. Being able to pay them on time and not having late payment charges is a big use case that one has been able to solve, right? The second use case there is definitely on medical expenses, unplanned expenses, unforeseen circumstances, and so on, which is typically another sort of 20-25%. Then, of course, you have those that typically are in the salary range or in the life circumstance sort of buckets, which are where they live hand to mouth, right? Where typically they will always fall short of money towards the last few days, and then they're kind of running around and scrambling for money, right? Whether they're like single breadwinners because they're putting their siblings through school, or they have a chronic patient at home, so they have a lot of leakage in terms of their income, and so they always have to borrow from a community lender or so on, right? So you have that bucket as well, which is typically at the lower end of the earning pyramid, and over there you typically see use cases again coming quite frequently. Think about 10% will be more lifestyle driven, and those are typically seen less frequently, but are more driven by seasonality, festive seasons, and so on.
Thank you so much for that, Anisha. It's been a very insightful session on understanding EVA and how it caters to financial wellness and engagement at large for employees and employees alike. We have the floor open now for questions. We do have a question from Vikas. Does availing these benefits/services have any impact on employees' credit score?
So they don't, because when the user is accessing the product, we don't actually, it's not reported. But if the user absconds and let's say they are not able to pay it back, then yes, it does. However, because the company is repaying it because it's deducted at source, it's typically always on time, and so it actually improves the credit score. But if they don't repay it, then of course it has an impact. But just purely accessing the product does not impact the user's credit score.
Right. I think, like you mentioned, when it's being deducted at source, and I think the from a user standpoint, the whole hassle of having to repay is also avoided here. So I think that is also a great
Yeah,
aspect to the product.
yeah.
Um, so, do any of y'all have any other question to ask? Please feel free to type it out here on our chat box. So, while some of you all might be thinking of your questions, I'd also like to talk about one of Billion Careers' product. It's called Dash. It's a product that I work on. It's also an employee benefits product. It's a product that brings in employee benefits and engagement into one cohesive place. It comes with a curated list of products such as salary advance, loans, and insurance, and also comes with daily interactive games for an employee. So at its core, Dash is mainly designed to give automated solutions to retain, engage, and secure talent. So if any of y'all are interested to know more about Dash, we'll leave some information about Dash in the chat section for y'all to check out later. Jiffy is part of Dash, and it's great to see how Jiffy functions as a product for employees, and it's also amazing to see the number of employees who engage with it as a product to avail financial aid on a month-on-month basis. And once again, Anisha, thank you so much for that insightful conversation about financial well-being and earned wage access at large. Is there something that you would like to tell us more about EVA or Jiffy in particular?
I think no, I think it's definitely a great I think it's going to be a product that's definitely 5, 10 years down the line going to be very, very critical and almost a given in any employee-employer relation. And so to that end, I'm excited to see how this, the early days, it's going to be good to see how the early days pan out to get us to where we want to.
Absolutely. It's definitely going to be interesting from here to see how the ecosystem develops and evolves with this as a product of financial aid. Looking forward to more such sessions. And thank you once again, everyone, for joining us. And a special thanks to you, Anisha, for
Thank you.
being part of this with us this evening. Tejaswini says, thanks for conducting. Absolutely, Tejaswini, is lovely having you and lovely having the rest of you all as well. And that's a wrap from us. And we'll be back soon with another session and hoping to see all of you all again. So good evening, everyone, and thank you.
Thank you. Thank you.